Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market update. Hope everybody had a beautiful weekend. And in today's markets, guys, we had a little bit of a green day. Most of the green came from some early news this morning that Apple and Google were entering potentially a partnership to develop some AI for Apple. Apple potentially wanting to use the Gemini software, AI software, obviously, that Google has been developing now for the past few years. There's been a lot of headlines in terms of Apple falling behind in the race to AI. And so this article shows two things. Number one, that Apple is looking to catch up, but also number two, that they may not have enough of their own proprietary software to do the job, and as a result are potentially reaching out to other competitors such as Google and Microsoft to see what they can do for them. So that news obviously brought us largely up on the morning. Apple stock and Google stock benefiting very nicely from that. But that is where the momentum ended for the day, guys, pretty much in the early hours of the morning. Take a look at the move in your pre-market after this news. And as soon as the markets opened and real volume came in, it was pretty much a categorical sell-off for the remainder of the day. Take a look at SPY, pretty much a sell-off right from the open, and QQQ, largely the same, sell-off right from the open. So in today's video, guys, we're going to be going over what exactly this news article entails. So we're going to be going over that when we cover our company specific technical analysis later on in the video when we do Apple and Google stock respectively. We also have another news headline that started off yesterday, but will be lasting all the way through Wednesday pretty much. And that is your NVIDIA GTC event that they host once per year. Now, this was supposed to be a very bullish catalyst for the stock. And it was leading into the early morning, but even NVIDIA, guys, selling off after your pre-market gains. Take a look here. They were up bottom to top at the start of the morning, about 5%, and ending the day not even 1% positive. Just basically a sell the news event, at least for this first day of trading, now that the conference is underway. And keep in mind, guys, this is going to be a very crucial week for the markets, not only because of how we're set up in terms of technical analysis structure on SPY and QQQ, which we'll take a look at later on in the video, but also because we have a huge day on Wednesday. Jerome Powell will obviously be coming out with an interest rate decision. Now, we are not supposed to get any change in interest rates this month. However, the notable thing to be looking at will be the SEP, the Summary of Economic Projections, otherwise known as the dot plot. It's just going to be a look into what each and every one of the Federal Reserve members has in terms of interest rate expectations for the remainder of the year. When will the cuts start? And how many cuts are predicted by the end of the year? Currently, the market is pricing in between 3 to 5 rate cuts before the end of the year. And a lot of people are expecting Wednesday's event to be a little bit hawkish and expecting the Federal Reserve to cut back on those expectations, maybe down to about 2 or 3 interest rate cuts for the remainder of the year, which is under the current expectation. So if that does happen, guys, the tilt is to be fairly bearish for that event, if indeed that's how it plays out. So in today's video, guys, quick little recap there. In today's video, we're going to be going over these couple of news events. We have one on Tesla as well that we're going to tackle once we cover Tesla stock. So we're going to be covering pretty much our major technical analysis on our indexes, see how everything is shaping up into the crucial Wednesday event. We're also going to be taking a look at our big tech stocks technical analysis, see how all of those are shaping up leading into Wednesday's event. And of course, we will cover my portfolio at the end of the video. Even though I have not traded, guys, I will just show you the portfolio and how it stands leading into this trading week. So with all that said, guys, let's get right into today's content. So SPY up 0.59%, QQQ up 0.82%, and we did have some more further rotation from the part of financials ending green, but healthcare rotating down to the downside. Now, we did have some outperformance in Google, Meta, and Tesla. These three names, Google, Apple, and Tesla were the three names that have been down pretty much a better part of the last 3 weeks while the rest of the market was grinding higher. Well, now we got some outperformance by Tesla, Google, Apple, which was up significantly more than how it closed the day, still ending the day nice. And we did have some nice performance by Meta as well. The bottom half of the market also showing some decent rotation here, guys, but no outstanding gains other than your big tech names. Even semiconductors not performing the best over the course of the day. Just goes to show, guys, that potentially investors are a little bit timid leading into Wednesday's meeting. On the one-day relative performance, you can see that most of our industry sectors were actually green for the day, led to the upside communication services, heavy outperformance. That industry is obviously led entirely pretty much by Google and Meta at this point. And then to the downside, you pretty much only had some losses in real estate, which is an interest rate sensitive sector, and healthcare. On the 1 week relative performance, shows largely the same here, a little bit of a mixed market, some outperformance communication services, energy, but to the downside, we do have healthcare, utilities, and real estate. Two of those sectors, utilities and real estate, are your interest rate sensitive plays. So no surprise there after last week's the past 2 weeks rather, hotter than expected inflation reports and your subsequent rise in yields. Obviously, your interest rate sensitive sectors are going to be heavily affected by that. So let us get right into our technical analysis breakdown, guys. We don't really have any earnings for today, so we won't be covering any earnings today. No earnings for tomorrow either. The big days are really on Wednesday and Thursday at this point. So on Wednesday, you'll see we do have Micron, going to be taking a close look at how Micron is doing. We may also take a look, guys, at either Chewy or Five Below. And then on Thursday, I do want to cover Nike and Lululemon are going to be the very big ones on that day, and potentially look into a little bit of how FedEx is doing. But for the most part, guys, earnings season is largely wrapped up at this point. So let's get right into our technical analysis, shall we? So in terms of SPY here, guys, right, we did finish green on the day. However, in the context of a current daily downtrend on SPY, have to reiterate this, guys, it is very crucial because the last time we had a daily downtrend on SPY was in the month of December. So at this point, guys, in the last 3.5 months, pretty much, we have not had a single daily downtrend except for now, leading into potentially one of the most crucial Federal Reserve meetings, at least for the next 2-3 months. So this could be a very pivotal week. Now, that being said, guys, we need to protect yesterday's low, 508.27, or rather Friday's low, excuse me, right? And if we lose Friday's low, it will just be a continuation of your daily downtrend. And then we really have to look at this trend line, guys, which is coincidentally also your 26 EMA. You can barely see it, but it's the orange line that's mixing up with the trend line right now. If we were to lose both of these levels here over the course of the week, well, in my opinion, guys, we are heading into further weekly consolidation. And keep in mind, in terms of your weekly, this is the first time since the month of October, pretty much, that we've put in a print of 2 red weeks in a row. Now, they weren't terrible red weeks, such as these ones were, but it could just be the start of something larger, a potential larger form weekly pullback that could send us, towards more the under 500 levels on your SPY. That being said, guys, Wednesday is really going to be crucial. I don't believe that we either crack the top end of this range, 518, or really the bottom range of this trend line much before the Federal Reserve has to speak on Wednesday. Until that point, I largely think that trading will be muted. So just keep that in mind, guys. Key levels to the downside. And if for ever which reason Jerome Powell surprises and is very bullish on that day, well, then you can expect potential a reversal of this daily downtrend currently to potentially a reversal to an engulfing move for the bulls. And then we're going to be looking to protect this trend line and potentially reset higher here. So very, very crucial week. It's going to give us some good ideas as to how and which direction this market will be trending over the next 3 to 4 weeks. Very crucial week this week. Now moving on to QQQ. So QQQ recovering its break of last week's trend line with some of that Apple news, guys. In my opinion, to be quite honest with you, if it wasn't for the Apple and Google news today, I largely think that we would have been significantly lower and potentially even still below this trend line. But the news came in and it helped out the bulls a little bit. That being said, we are still in a daily downtrend currently. So we are just looking for a lower high for potential lower low to the downside here until the bulls prove to us that they want to regain this daily uptrend to the upside here. As of now, short-term bear control. And if you are in short-term bear control, lose these trend lines. We are below the moving averages currently still. If we were to lose this trend line right here and send us down, in my opinion, guys, that would be a break of your weekly trend line as well. And we will be heading into further weekly consolidation. At that point, guys, 421 is crucial. It is your most recent higher low on the weekly. And if for ever which reason we were to break below this level right here and get sent into further consolidation, well, your previous all-time highs around 405 on the QQQs would be a highly likely level, guys, for some potential monthly higher lows shaping up into continued uptrend for the rest of 2024. So basically what I'm saying, guys, is I maintain the position that I am short-term bearish leading into this event and potentially short-term bearish for at least the next 2, 3, 4 weeks while we get our much-needed weekly consolidation. It's been a very beautiful 4 months worth of rally, but everything needs to eventually consolidate. There's a lot of greed in the markets right now, and this would be perfect in terms of the seasonality to actually do that. Keep in mind, interest rate cuts don't really come much before June and July. February and March are known to be negative seasonality periods. We haven't got any meaningful drops as of yet, and there is a fair bit of greed in the markets currently. So it'd just be, a combination of many different factors that could lead into a very healthy sell-off, but that sell-off will be a decent buying opportunity in my opinion. Now moving on to financials. So financials holding up this rising wedge. I'm still watching for the break to the downside of this rising wedge. Yes, our Friday's low is going to be absolutely crucial. As you can see now, the bulls are still in a daily uptrend. However, if we lose Friday's low, you will be setting a daily downtrend, and you will also be breaking this uptrending rising wedge right here to the downside. And this is usually a bearish pattern, guys. Usually when these break to the downside, they tend to break quite hard. Couple that with the fact that we are at overhead resistance, your previous all-time highs, this red box right there. It would be a perfect zone of confluence for a little bit of consolidation at this point, guys. But the bulls have tons of space on the weekly. Anything pretty much above 37, just going to be for a weekly higher low for further trend continuation later on in the year. And just keep an eye, guys, on your 12 EMA. Should be the first line of defense, currently sitting at about 39.40. So the bulls looking good, but the fact that we're in a rising wedge scenario, we have the Federal Reserve meeting on Wednesday, which is highly crucial for interest rates, and financials are sensitive to interest rates. So if we get anything negative, I do expect the pullback to commence at that point, and then we'll just be looking for weekly higher lows. Your bulls are in full control of all these higher timeframes, guys. I'm just looking for some potential short-term pullback here, maybe for about 2, 3, 4 weeks here, not expecting a massive crush, just some healthy weekly pullbacks here indeed. Now, moving on to healthcare. Healthcare actually down for the day, 0.37%. We are challenging our previous lows, guys. 144.50 needs to be on the watch for everybody who's looking at the healthcare sector right now. If you lose that, you lose your daily uptrend, and it sets up the bears perfectly to then use this 144.50 as potential resistance for a continued daily downtrend, and that would just be further weekly consolidation. Now, healthcare has already been consolidating largely sideways, but still consolidating for the past 3, 4 weeks of trading at this point. The next level I'm targeting, guys, for healthcare is going to be your previous all-time high area, and that is roughly the range between $142 and $140. So this little pocket right here should prove to be a very solid area of support. And once again, on this sector as well, we're just looking for a weekly higher low for further trend continuation down into the later parts of the year. So bulls in long-term control, but we are on crucial short-term watch here for the potential loss of these levels right here, as the bears have now engulfed your most recent leg of the daily uptrend, cut the lows. Now it's up to them to set the daily downtrend in motion for that extended weekly consolidation that we've been looking for. Now moving on to the Russell. The Russell not performing too well today because yields once again were highly green, and I warned about this last week, guys, after we've been pretty much getting so many negative inflation reports back to back, right? And I reiterated that in yesterday's video and even the week prior when we got the CPI, right? Inflation is coming down. It's on a downtrend. The problem is that it's stuck relatively around the 3% range. Now, we have a lot of different individual factors within those inflation reads that we can pick apart, right? Is it because of housing prices? Is it goods prices? Is it other services prices? Now, all of them relatively are coming down, except for a few sticky ones like transportation and shelter, and those should be coming down over the course of the year. However, what it tells the Federal Reserve is that there's no need to cut interest rates that quickly. Keep in mind, the economy is good, the jobs market is still relatively good, and inflation is trending towards target, although it's not at the target yet. In other words, the Fed still hasn't broken anything to warrant extremely fast rate decreases. So that's why this yield speculation continues to be on the rise after those negative inflation reports. It's just saying higher for longer. That's all this yield curve is showing. And obviously one of your biggest losers when that happens, when we get a resurgency in higher yields, well, what happens, guys? Growth stocks tend to take a little bit of a hit, and that was the case for the Russell at the current time. So now, at this point, guys, daily downtrend has been started for the bears. And if we get a break here of 20.25, that daily downtrend is just going to be perpetuated into further weekly consolidation. Now, a couple key things here. We're coming up on this big crucial area. This was previous resistance, should now be acting as current support. And we do have the weekly higher low all the way down here at 187.80. I wouldn't like to lose the lower bound of this whole zone, which was previous resistance. It is acting as support now. But as I've said, guys, the Russell cannot do it on its own. If the Federal Reserve absolutely crushes us on Wednesday, let's say, well, then expect the Russell to most likely be able to pull all the way back, potentially even as low as the 190 area. Once again, struggling to maintain closures above this level. We did a great job in the month of February to get all the way up here. However, if the macro data is not cooperating with us, it's going to be very tough for growth stocks to manifest the rally that we've been wanting them to have, guys. That needs macro data, and we're just not getting it yet. So keep an eye on these levels here, guys. Crucial levels to protect here. 195. And if we lose the 195 and we come back under this whole resistance zone, well, the next target, guys, that we need to protect is 188. And that's kind of where I want to go shopping much more than up here. I don't think there's any urgency for this trade, guys, because interest rates are not coming down quickly. And when they do start coming down, guys, it may be cut, then pause, then further cut. So we need to see what the Federal Reserve is going to say on Wednesday. And now lastly, the Dow Jones. Dow Jones also struggling a little bit here on the day, even though we had a green print by the end of the day. 0.2%. You can see that once again, it was a sector gap up open into hourly downtrend by the bears, pretty much selling off the remainder of the day. So the Dow Jones remains at a crucial crossing point right now, right? 38,500 is going to be the line in the sand level. If we lose that level right here, you will lose this daily uptrend. The bears will be in short-term control. Then they can use this support area as resistance, set the daily downtrend. And at that point, guys, we may just be heading into further weekly consolidation for the Dow Jones. It's a good thing that the Dow Jones has tons of space. However, anything pretty much above 37,100 is just going to be looking for a weekly higher low for further continuation. And I brought this up in the prior week's video, right? We can get some weekly consolidation, guys, on a lot of these names, right? Take a look at your previous bull markets. And the previous bull markets, right? You take 2020 and 2021, right? Dow Jones can go up very nicely, but it always has to pull back. And when it does pull back, take a look at these pullback cycles, right? 7% here. We had another 5% one here, even right here, about 5%. That's 2020 and 2021, right? In a trending market prior to the pandemic, we also have a few pullbacks, 4% here, 6% here, another one, 6% there. And even in markets prior, guys, you can go back to 2016 if you want to. We always get some extended pullbacks, right? 4%. We had another extended one here, 4.25%. This pullback right here, 4.25%. How much has the Dow, and you can do this on the S&P 500 or the QQQ as well. How much has the Dow Jones pulled back in the last 4 months? 1.5%, right? So it does have some room to come to the downside. And funny enough, that weekly higher low right there is pretty much about 5% below here. And then we're right at our previous all-time highs, which is big support. Take a look, guys. MACD as well crossing on the weekly chart. So it has to be notable to you, may just be lining off for some potential future sell-offs here. Now let's move into crypto a little bit, because crypto has done a little bit of movement here over the past couple of days. So Bitcoin quickly losing a bit of your prior level. Sorry, let me draw this properly, right? Nice daily uptrend right here. And now the bears have taken back a lot of the move. Remains to be seen. Will we be setting a lower high into lower low, which would mean weekly consolidation? Take a look at this wick that we closed pretty much on Sunday. Does lead us to believe that potentially market's a bit too greedy coming into this all-time high break and maybe due for a little bit of a pullback as well. Now, keep in mind, my personal thesis for crypto as a whole, guys, is yes, we're in an outstanding bull run right now, and we are severely undercapitalized to where we were in 2020 and 2021, meaning we've done all this significant rally on lower volume and lower retail trade than we did in 2020 and 2021. That being said, if the Federal Reserve crushes us on Wednesday and sets rate hike expectations, rate cuts expectations further down in the year, I do think crypto will be affected as well. Keep in mind, guys, crypto is a risk-on asset, right? It's very tough for crypto to continue to be bullish, even though financial stock markets here would have an extended sell-off. In other words, if we get an extended 2, 3, 4 week sell-off in the stock market, I don't think crypto will just continue grinding higher all throughout that sell-off because it is a macro event catalyst. It's not just a technical catalyst on your traditional financial markets here. It's more of a macro shift catalyst, and that will impact crypto as well, in my opinion. Now, if we do get this potential sell-off on Bitcoin, I am personally looking to go shopping here. Down below 60,000, below your previous all-time highs would be a very healthy area for a weekly pullback, weekly higher low for further price increases. Keep in mind, we have the halving event in April, and overall the tone in, or the sentiment rather, in crypto right now is quite bullish. That being said, we will keep a close eye what happens to crypto on after the Wednesday event. Ethereum looking much of the same, right? Ethereum pulling back pretty hard as well. So we had a nice daily uptrend here. I mean, it's been a daily uptrend here pretty much since the start of February. But from our last daily uptrend leg, you can see that the bears have taken back a number of this move, right? 80+%, let's call it 85%, excuse me. So in that case, it gives the bears an opportunity to set the lower high into lower low flush. That would just mean further weekly consolidation for Ethereum. And I would personally be targeting, guys, the 12 EMA is going to be a great first line of defense. That's around the $3,000 level. Anything pretty much above 2,200, just going to be a healthy weekly pullback for potential further price increases later on in the year. Ethereum is pretty much going to follow Bitcoin at this point. The entire market's going to be following the moves of Bitcoin. So we're going to be very curious to see what happens after the Wednesday event for all of crypto. Now let's jump into some big tech names, shall we? So Apple looking decent on the day, 0.64% to the upside, but take a look, guys, at this sell-off, right? Extremely good news. Take a look. Apple at a certain point on the day was up pretty much 3%. So for it to only end up 0.64% just goes to show you guys that people are selling each and every pump on Apple stock currently, potentially being a little bit timid leading into Wednesday's meeting. This is potentially, you know, maybe some institutions just benefiting from a little bit of price increase to offload some position, take some risk off the table leading into the Federal Reserve meeting. That being said, Apple, with this most recent move up, has finally recaptured the daily uptrend. This is exactly what we're looking for here. It's just unfortunate that it's in the greater context of the Wednesday catalyst, right? But as a whole, have to give it to the bulls. They did set the daily uptrend, getting as high as almost $177.50, $178. So looking good. Any pullback now, we have to protect Friday's lows, 170.21, to continue this daily trend higher. Now, I would not want to see them lose 173 because that's your previous resistance, should now be acting as your support level, right? So Apple, same thing as the rest of the markets, guys. Wednesday's data is going to be absolutely crucial. If it's bad, we can literally undo this entire move, and then we'll just be doing right back down here at our lows, looking to protect pretty much 168 lows, and then as low as about 165. So Apple, very healthy move. Daily bulls are back in control right now. The weekly bounce, however, is not all that, right? In the greater context of this weekly move down, so far, even with today's price action, right, the move only takes us as high as about 25%. That's not enough, right? So the daily uptrend really needs to gain a bit more steam. And in my opinion, guys, if you want to see some more notable long-term shifts here in terms of, let's say, like a weekly trend recapture by the bulls, well, they really need to get to bounce right now up to about 182 all the way up to about 185. That would create them enough space on the weekly to do exactly what they did here on the daily, which is really your trend change to the bulls. So keep all of that in mind for Apple this week. Wednesday's trading day going to be absolutely crucial. Will we be able to protect this daily uptrend, or will the bulls give it all back in the face of greater macro concerns with interest rates? So this was the big news headline for the day for both Google and Apple stock. So Apple is in talks to let Google Gemini power the iPhone AI features. Now, Google and Apple already have a partnership. It's about a 20-year-old partnership at this point, whereby they allow Google to be the default search engine in their Safari browser. But it doesn't come at a cheap price. Google pays $15 billion every single year to maintain that right to be the first in terms of the search engine provider for Safari as a platform. Now, with that being said, this is a very interesting partnership. However, it is not set in stone yet. So this is very important to remember, and we'll be keeping a close eye on these developments over the next couple of months. Here is the article, the gist of things. Apple Inc. is in talks to build Google's Gemini artificial intelligence engine into the iPhone, according to people familiar with the situation, setting the stage for a blockbuster agreement that would shake up the AI industry. Apple obviously lagging a bit behind in AI and maybe trying to leverage Google or Microsoft, because Microsoft is potentially also a competitor here, one of the two's AI capabilities, and bring it into the Apple ecosystem. The two companies are in active negotiations to let Apple license Gemini, Google's set of generative AI models, to power some new features coming to the iPhone software this year. So Apple also held discussions with OpenAI and has considered using its model. So OpenAI is obviously owned by Microsoft right now. So it just goes to show that Apple is shopping around for who has the best AI for what Apple needs. Now, if a deal between Apple and Google comes to fruition, it would build upon the two companies' search partnership. For years, Alphabet's Google has paid Apple billions of dollars annually to make its search engine the default option in the Safari web browser on the iPhone and other devices. So as I was saying, about $15-20 billion a year, as a matter of fact, not a small amount. Apple is preparing new capabilities as part of iOS 18 based on its own AI models, but those enhancements will be focused on features that operate on its devices rather than ones delivered via the cloud. So Apple is seeking a partner to do the heavy lifting of generative AI, including functions for creating images and writing essays based on simple prompts. So Apple has more than 2 billion devices in active use that could potentially become home to Google Gemini later this year. That would be huge for Google. Gemini is going to give them a lot more devices, a lot more input to refine their Gemini AI as a whole. Now, a partnership between the two Silicon Valley giants would likely draw the eye of regulators. Google's current deal with Apple for search is already the focus of a lawsuit by the U.S. Department of Justice. The U.S. Department of Justice already going after them, guys. They don't think that the deal that Google has as a monopoly for search engines for Apple is a fair deal. So there's already a lawsuit between them right now. So the government has alleged that the companies have operated as a single entity to corner the search market on mobile devices. The pair has justified the arrangement by saying Apple believes Google's search quality is superior to rivals, slap in the face for Microsoft, and that it's easy to switch providers on the iPhone. So basically the customers have the choice. While the talks between Apple and Google remain active, it's unlikely that any deal would be announced until June, when the iPhone maker plans to hold its annual Worldwide Developers Conference. So that was pretty much the talk of the day, Apple and Google building on their existing relationship. So we will be following that story very closely in the upcoming months. But it does show us one thing here, guys, that Apple is just not ahead of the AI race, not as much as they wanted to. So now they have to search for partnerships. All in all, it's a good thing in my opinion. So moving on after Apple, let's tackle AMD right away. So AMD, not looking too bad, 0.21% to the downside, definitely not benefiting from any substantial runs here from your NVIDIA GTC conference that we'll be going over when we go over the NVIDIA stock. That being said, guys, AMD is still in a bit of a daily downtrend here, and we are approaching our first level of support, which is the top end of your prior range of consolidation, right? The 182.50 level is where the bulls have put up some decent support so far. However, right, we are in a bit of weekly consolidation right now. It's a beautiful weekly uptrend, I'll give you that, but we are in weekly consolidation. Wednesday is going to be crucial for this stock as well, as if we just perpetuate this daily downtrend into the lower part of the range here, guys, well, we're quickly going to be challenging our range lows, and those sit pretty much around the mid 160 level, all the way down to about 160, which is your previous range of all-time highs. So I will be looking for the bulls to support these prices if ever AMD and semiconductors as a whole take a big hit after Jerome Powell for the next coming weeks. I'm just setting the stage. However, as of now, guys, your bulls are in absolute full control, just looking for a weekly higher low, anything above 161, weekly higher low for potential further trend increase. No red flags as of yet. Bulls doing their part in acting as big support at this first line here. And as I said, guys, if we lose that, well, the next area of defense has to be down 164 range. Now, moving on to Amazon. Amazon only about flat day, 0.03% to the upside. not anything meaningful. Amazon, sorry, still struggling, guys, with your 178 area of resistance. How long have we been struggling now? Well, not as long as we did struggle with it back in 2020 and 2021, right? But still at this point, guys, it's been about 4 weeks that we've really categorically been denied these highs on Amazon. So crucial level leading into this week, guys, is 171.59. If you lose 171.59, you lose your daily uptrend and you potentially set the bears up for daily downtrend momentum and potentially a weekly consolidation. Although Apple's been consolidating on the weekly now for about 3 weeks in a row, it's largely been sideways without much significant price declines, right? If we do get some significant price declines later in the week and set up the daily downtrend, then on the weekly, we need to pay a close eye, guys. 166 is your next area of support. And below that really becomes your gap fill area of prior to earnings, right? 160 would be the gap fill area. And that would be a beautiful location, guys, for a monthly higher low for further trend continuation over the course of the year. All in all, bulls are in full control leading into this week. We just have to watch how the week ends. I am definitely looking to shop for Amazon. If we do get price declines here down back into the 160s over the course of the next couple of weeks, that is where I'm shopping for Amazon myself. Moving on to Google. Google as well here, guys. I mean, they had some pretty bullish news, right? They did end up about 4.44% on the day, as the news was much more bullish for Google rather than for Apple, right? Because Google is going to be paid potentially tens of billions of dollars by Apple if this deal goes through. So it's a much better deal for Google, right? That being said, take a look at this, guys. They were up at one point in the morning, almost 8%, and ended the day, cut that in half almost, 4.44%. Categorical selling the entire portion of the day. Really some heavy profit taking on Google, which has left a nice gap under the price right now. That being said, Google currently in a very nice daily uptrend right now. So any pullback, guys, just going to be looking for a higher low. Anything above 141, just going to be a daily higher low for potential further trend increase here in the later part of the year. And they've done a great job here with today's weekly candle. Pretty much, we are now pretty much almost engulfing our most recent weekly leg down, and sets up the bulls beautifully to where even though if we get crushed on Wednesday and in the next few weeks, this will just be for healthy weekly consolidation, looking for the weekly higher low and reverse into a weekly uptrend. Google's been stuck in this nasty weekly downtrend here since pretty much the end of January, and now they've done a great job of getting back above your moving averages, really clearing this previous area of resistance, which was now support, right? And getting above that, mounting above it. So it's going to be extremely good for Google here. If we do trail back down into the lower $140 range, this is going to be an easy buy for me. Now moving on to Meta. Meta performing fairly decently here on the day, 2.66%, but you can see Meta is still trapped here, guys. Still trapped. I mean, they've been trapped. It's a relatively wide range. I agree with you, right? 450 up to about 500, talking about a roughly 10% range. That being said, guys, on the weekly, still looks relatively flat. Okay, so what we need to be paying a close eye to is Friday's close, 481. If you lose 481 this week, daily downtrend is set. It would be your first daily downtrend on Meta since the month of December, and that would just queue up for more weekly consolidation. If more weekly consolidation comes, 456 is your first stop. That's going to be your weekly higher low. And for every which reason, guys, we lose the weekly higher lows, no big deal. Still not a weekly downtrend. Weekly downtrend would be this, right? Lower high, lower low. Well, we would just be looking for monthly consolidation if we lose this weekly trend right here. I do think it's just going to be one clean shot. I don't think Meta is going to get carried into a weekly downtrend for like 2 months or something like that, but could just be a little bit of downside movement, then sideways, and then a recapture of the uptrend. So that's what I'm looking for on Meta. If it does happen, guys, 440 down to about 420 is my sweet spot for buying the stock myself. But the bulls still in full control, guys. Weekly chart full control, monthly chart full control, and daily still haven't lost the lows, just a little bit of a tightening range right now. So keep a close eye on this week's trading on all of big tech. Moving on to Microsoft now. So Microsoft doing a little bit of what we predicted, right? If we're going to get a look above and break below, we are almost free and clear of this higher range trend line right here, right? Or rather higher end of the range horizontal resistance line. So now we're pulling back below it. That being said, we're in the context of a beautiful daily uptrend. Anything above 401.50, just gonna be looking for a higher low for further trend continuation here. And we are battling with this horizontal line, guys, right? So we are trying to mount above it and close. But as I said, Everything relies on the Fed this Wednesday, guys. It's so important because so many of these stocks, right, are at crucial levels right now, and Microsoft is at a crucial level of its own. We are trying to get a break and rally, but if Wednesday falls apart, guys, we will not be able to most likely break above and rally. Microsoft won't be able to do it on its own, and then we'll be trapped within this range once more, and then we'll be looking to the downside to act as our last line of defense. $398, about $400, let's call it, right? So I wouldn't be, I'm not going to jump the gun and say that Microsoft is on its way to a breakout. Really have to wait for Wednesday's data. As I can say, guys, tomorrow we can have a nice day and break to the upside here on Tuesday, and then Wednesday may just flush, and that would literally be just a daily downtrend coming back into this range, and then we'll just be into further sideways weekly consolidation for Microsoft. So looking good for now, but Wednesday will be the major catalyst. Now moving on to Netflix. Netflix as well, as you can see, guys, sideways trading. So it's pretty much the same. Anything that hasn't dropped significantly, right, has just been stuck in a sideways range. Think of Meta, think of Microsoft, think of Netflix, right? Just stuck in these sideways ranges. Think of Amazon as well, right? Stuck. It just goes to show, guys, that even though a lot of these stocks are at year-to-date and even all-time highs, there's a reluctancy to push these beyond their most recent big levels onto that next leg, which would be a heavy next weekly leg and heavy leg up on the monthly as well. So maybe a little bit of pullback incoming, guys, before we can get these breakout patterns on a lot of these big tech names. That being said, Netflix, no red flags as of yet, still a daily uptrend. Keep an eye on this low right here, talking about 597. Lose 597, you lose the daily uptrend, you'll be losing your 12 EMA. Take a look at how well the bulls have been defending this 12 EMA. So if we lose the daily uptrend and lose the 12 EMA, it should be notable to you because Netflix has literally not done that, guys, in 2 months at this point. If we do lose that, and we do head into weekly consolidation, guys, you know the levels. 575, this line right here, huge level, used to be resistance, should now be acting as support. And then obviously you have confluence with the 12 EMA moving average coming into that support zone as well. That would be my first line of defense. Second line would be your weekly higher low at about 550. So Netflix, as of now, looking good. Keep an eye on this one leading into Wednesday and after Wednesday's trading. Now moving on to NVIDIA. NVIDIA, great day today, right? Up about 0.7%. But as I was saying, once again, gap up open because they started their GTC conference yesterday. And then look, top to bottom, guys, almost 5.71% to the downside, ending somewhat in the middle, up about 0.7%, but it could have been a lot better, right? Maybe a little bit of sell the news event on NVIDIA. It was a fantastic event, guys. I really suggest that at least you watch a summary recap if you can find one on YouTube. I won't do it here because it's not really the context of the channel, but if you're into technology and AI advancements, I highly recommend that you do watch a recap of the NVIDIA presentation that happened yesterday and today. It was absolutely fantastic. I tuned into about an hour of it myself. And it just, the waves that this company is generating in all aspects of his business is phenomenal. And dare I say, guys, if you do not have any NVIDIA shares for the next 2, 3, 4, 5 years, I highly think you're missing out. Not only because of the company's expected performance, but also because it's such an integral part of your indexes right now. The market cap is so high that if you don't have this stock, unfortunately, your portfolio probably will suffer from underperformance. But they're just a very well-oiled machine right now. Let's go through a few of the headlines that they took us through right here. So they came out with their new Blackwell product. So NVIDIA Blackwell platform arrives to power a new era of computing. So last year, they were running something called the Hopper software, and now they've moved on to Blackwell. It's basically their version 2.0 of the same thing they've been doing since last year, building massive server farms of GPUs to really harness the power of that computing, those computing systems for running large language models such as OpenAI and other chatbot systems or other other AI systems that require high amounts of power, not only energy but also processing power, right? So here's a few of the headlines. GTC powering a new era of computing. NVIDIA today announced that the NVIDIA Blackwell platform has arrived, enabling organizations everywhere to build and run real-time generative AI on trillion-parameter large language models at up to 25x less cost and energy consumption than its predecessor. So very good advancements in technology by NVIDIA. Here's the CEO, Jensen Huang. For 3 decades, we've pursued accelerated computing with the goal of enabling transformative breakthroughs like deep learning and AI. Here's what he said, guys. Listen to this one. Generative AI is the defining technology of our time, and I highly agree. Blackwell is the engine to power this new industrial revolution. Working with the most dynamic companies in the world, we will realize the promise of AI for every industry. Among the many organizations expected to adopt Blackwell are Amazon Web Services, Dell Technologies, Google, Meta, Microsoft, OpenAI, Oracle, Tesla, and xAI, your largest companies in the world. And I won't read these all to you guys, but this is the article on NVIDIA's website themselves. Every single CEO of every single large corporation that you can think of is running the new Blackwell hardware and their new software offerings as well. Take a look at what Sundar Pichai, CEO of Google, had to say about this, right? We're fortunate to have a long-standing partnership with NVIDIA and look forward to bringing the breakthrough capabilities of Blackwell GPU to our cloud customers and teams across Google. Andy Jassy, CEO of Amazon, right? Our deep collaboration with NVIDIA goes back more than 13 years when we launched the world's first GPU cloud instance on AWS. Now they're happy to be using Blackwell. And it just goes on, guys. You know, Mark Zuckerberg coming in here. Michael Dell, founder of Dell, right? Satya Nadella, the chairman and CEO of Microsoft, coming in as well. Sam Altman, the CEO of OpenAI, or ChatGPT that you guys might love so much, right? Look at what he had to say. Blackwell offers massive performance leaps and will accelerate our ability to deliver leading edge models. We're excited to continue working with NVIDIA to enhance AI compute. And it just goes on. Larry Ellison, even Elon Musk chiming in, right? Everybody wants these devices and are ready to pay a hefty price for them. So the GTC conference will be lasting through Wednesday, or I believe even Thursday. A few people present on Thursday. Just a very good time to be learning about AI and how it's going to impact businesses and their models and profitability for the next 5 to 10 years. I'm extremely excited about the industry as a whole. Now, in terms of your technical analysis, guys, NVIDIA is still trapped in a tightening range. And I believe, to avoid sounding, well, you know, I don't really want to sound like a broken record here, guys, but Jerome Powell really does hold the key, right? So today we saw that the news event from NVIDIA, although it was very good, was a sell the news event. We are in a little bit of a tightening range here, and we need to keep a close eye, guys, on our lows right here, 864. Lose 864, and you set the daily downtrend in motion. That will kick off further weekly consolidation, in my opinion. And at that point, guys, you guys know I've told this level a few times on the channel, 740. 740 off of a daily downtrend, right? And some weekly consolidation, maybe a couple weeks of consolidation here. That's going to be the target. It is the pre-earnings area of a resistance. Sorry for drawing such a terrible straight line. So here is your level right here. Mark it on your charts. I do believe this comes and acts as weekly support. You also have the confluence of the 12 EMA right there. And that will represent a decent sell-off from the highs for NVIDIA, guys, about 22%, roughly about 40% of the entire move. That would be a very healthy pullback. And I will be buying NVIDIA down here. Represents a very good buying opportunity for long-term investors as well at that price. So keeping a close eye on that. For now, no red flags. NVIDIA can always just put the daily uptrend in motion and just erase this temporary weakness. But as I've said, guys, I truly believe Jerome Powell holds the key for either or of those two scenarios. Now moving on to Tesla. So Tesla up a little bit today, 6.25%, and they had some positive news, but is it too little, too late? That's what we're gonna go into when we take a look at this model, at this article right here. So the reason for the rise, over the weekend, Tesla actually hiked its prices. Now that's a stark contrast from what they've been doing for the past couple of months, cutting price. Every time you see Tesla price headlines for the past couple of months, it's been decreases, right? Well, now they are increasing prices, but it's not for the right reasons, guys. It's not because demand is higher. That's what's unfortunate about this. So here's some of what the article covers. The company will increase the price of all Model Y trims by $1,000 next month, while Model Y prices in Europe will go up by around $2,100 on Friday. In China, Tesla is offering discounts on inventory Model Y vehicles between $1,000 to $500. So in China, the price wars continue, but everywhere else, US and Europe, they are doing some price increases. Now, too little, too late? Take a look at this. The pricing move comes after Tesla to maintain sales momentum, has aggressively cut vehicle prices and offered discounts for more than a year. As a result, auto gross margins, which peaked at 30% in 2021, have plunged well below 20%. Analysts argue that the strategy is not helping demand and is hurting the company. This is true. Tesla observes Tesla observers report that inventory is currently quite high and that the EV giant's price hikes do not indicate rising demand. What Tesla may be trying to do, guys, is they may be trying to stimulate some reverse psychology, right? If the prices are going to go up, well, maybe I need to buy my Tesla now before the prices go up, right? So now they've kind of realized that decreasing prices is not stimulating demand because people have gotten used to it. They're just going to wait for further price decreases, right? But now if Tesla says they're increasing their prices, maybe you get some people trying to buy Teslas before their price increases come in line. So that's kind of the strategy they're trying to employ. Now, with the first quarter ending in just 2 weeks, Tesla appears to be heading for a delivery miss. That would be the first time in a while that they miss by a significant number. If they do, Wall Street consensus currently still has Q1 deliveries at 487,000. However, many analysts have cut predictions in recent days. So that is what we're going to be looking at here, guys. Deliveries come out April 1st. So Tesla getting a nice little bump here, was fairly oversold leading into this bounce and was also being plagued by negative news headlines. So this slight little positive headline was enough to really help Tesla share prices as of today. But guys, the technicals are not looking fantastic, right? So we are in the general context of a daily downtrend right now. This bounce does not change that. It is a nice bounce, however. You can see that the bounce has now taken back roughly around 61% of the move. So it does set the bulls up nicely for a potential daily trend change. However, I keep saying however this video, if Wednesday we get crushed by the Fed and he says higher for longer, what do you think it's going to do to Tesla's long-term premise? It's probably going to hurt the company, right? At least, well, when I say long-term, guys, I really mean 6 to 12 months, right? If interest rates get pushed back and we stay higher for longer, it's not going to help stimulate demand for EV sales or really auto sales as a whole, right? So that could be another negative catalyst for Tesla. So I wouldn't say we're out of the woods yet. Yes, the bulls have created a lot of space, but we do have a lot of other headwinds, guys, that we went over in, a few weeks ago at this point, right? Or maybe it was even last week. I can't remember. It was one of the two past week where we went over all these short-term negative catalysts and then our long-term positives. None of these short-term negative catalysts have changed despite today's price increase. So just keep that in mind with the company. That being said, we're bouncing out of a support zone right now. 180 to 170 is a very strong support. We dipped below it last week ever so slightly. Now we're back above it. The last line of defense stands down here at the 152 level. So going to be very curious to see what is price going to do for the remainder of the week. If Jerome Powell helps us out, we may get an engulfing move and we could get above the 180, 170. These two lines right here could bring us above that and maybe reset the daily uptrend. And then we can reevaluate. However, if the news is negative on Wednesday, expect the daily downtrend to continue at that point, and we'll be looking to the lows 152, 153 to hold in the context of this overall weekly downtrend, right? Now let's move on to Palantir. So Palantir at about $24 here, up about 2% on the day. Not too bad of a day for Palantir, if I do say so myself, but it is pretty hard for the bulls right now to put in a V-shaped recovery, in my opinion. Usually when you see an engulfing move by the bears like this, the most probable scenario is going to be a lower high into lower low, and that would just mean that we're in for further weekly consolidation. I would welcome weekly consolidation, guys. If we can get down to my green box, I will love to buy Palantir down here. $21 all the way down to about $19 is my sweet spot zone. Huge area of previous support, 2020, 2021, and then our previous 52-week highs as well as resistance. So now this area should be acting as very, very juicy support for the stock if we get some continued sell-off. So the bulls short term are looking a little bit weak. You can see we lost our 12 EMA and we've engulfed this entire move, right? So we are going to be looking out for the potential daily downtrend and further weekly consolidation here. I would expect that to come down, as I said, guys, $20, very healthy. Even if we lose the weekly lows in that process, guys, it's just going to be for very healthy monthly higher lows for monthly uptrends. I don't believe Palantir is going to set a brutal weekly downtrend, something like this. If anything, we'll probably lose it here and then try and regain it in 2 steps, similar to a move that they kind of did right here, right? So that's kind of what I'm expecting. Maybe a full give back of the weekly move and then going to readjust and probably set the trend higher as we just form that monthly higher low for the move higher. So Palantir, not looking bad at all, guys. I just want to get a little bit better price for myself. Now moving on to PayPal. PayPal with a nice day here today, 2.2% to the upside. And as I was saying, guys, when PayPal was going to break this daily downtrending channel line, it was most likely going to get some significant follow through. Now, since then, that has happened. We're now getting that exact same significant follow through. The problem lies in the however, once again, guys, Wednesday. PayPal is an interest rate sensitive stock. And I do believe that if we have a negative catalyst on Wednesday with Jerome Powell, that is going to ruin quite a little bit of momentum on PayPal stock. That being said, we've created a ton of space off these lows here. So any pullback, anything above $58 is going to be looking for a daily higher low for potential further trend continuation. Keep an eye on your previous area of resistance, $61 rightly, and your moving averages are down here as well. And we are above this downtrending trend line too. So the bulls have some wind in their backs right now. It's looking very good for PayPal stock. But as I said in last week's video, guys, if the market as a whole falls apart, do not expect PayPal to do it on its own and just mount a significant rally up to 75. If, however, Jerome Powell is not as bearish as we think, and the rest of the market gets some lift off of that, well, then I do expect PayPal's rally, guys, to continue, albeit slowly, because PayPal is not much of a, much of a high flyer, right? You don't really see back-to-back 5, 6, 7% days by PayPal. But that being said, I do believe that we can grind this weekly trend higher all the way up to our next target of 75. So just keep those two scenarios in mind. As I said, guys, all dependent on Wednesday. If we did not have the hotter than expected inflation reports in the most recent months, and if this Federal Reserve meeting on Wednesday wasn't such a crucial element, guys, I would have been longing PayPal from before here, going for the break. But I just can't bring myself to do it, guys. I have to stick with my thesis, and that is short-term bearish, especially on interest rate sensitive stocks. For being long-term bullish, I'm looking, in other words, to buy some dips over the next month, and I do believe that a temporary sell-off is coming. So with all that being said, guys, hope you enjoyed today's recaps. Let's take a very brief look into my portfolio. So guys, taking a look at the portfolio, you can see that really nothing has changed. No new trades on the day. I am still short on my NASDAQ futures trade. We're going to be holding that probably through the Wednesday session. And I do currently have some covered calls on Apple. You can see here that I have 100 shares on Apple, got assigned at 180. And currently, I do have some covered calls on them at the 177.50 because I'm not expecting Apple to close above that. Now, Apple did have a significant update today, and we got pretty much to my 177.50 level, sold it all the way back down to pretty much the 173s. I would be highly surprised if, the only situation in which I see Apple closing above 177.50 on Friday is if Wednesday is an extremely bullish day. At that point, guys, I will take the tiny little loss that I do have. My average cost on those shares for Apple is about in the $178.20 range. That is considering I got assigned at 180. I had the put premium on the 180s, which brought me down to about 179. I got about $1 for those 180 puts. And then we wrote these covered calls on Apple, right? So my average cost right now, about 178. 20-ish, 178.30, so not that high above 177.50, so I'll keep those. We also have the BABA $77 covered calls. You can see here we wrote them for 47 cents. They are now down to 21 cents as BABA just has not moved whatsoever pretty much in the last 2 days of trading, so I'll keep those open for the remainder of the year, just looking once again to hedge my portfolio slightly to the downside, bring my average cost down. And then we obviously have the Nike 106 calls. We wrote them last week for $1.77, and Nike, since they've been trading below right now, those calls are down to about $1.17. So I'm making some money on the covered calls here, guys. On Nike, my average cost right now is sitting at about $110. And they do have earnings this week on Thursday, right? So very big day for them. I locked in these covered calls at roughly the 106, which is big previous resistance for the stock. So I'm really not, unless they have a fantastic earnings, guys, which between you and I'm not really expecting. Things in China haven't turned around that much, and consumer discretionary spending hasn't turned around that much. So unless Nike comes out and says, we saved $10 billion through extreme cost-cutting measures that we've implemented over the last 2 quarters, I don't really think that we're going all the way up to 110. So I was happy running these 106s, getting some nice juicy premium for them in that respect, guys. And at this point, guys, our break even is roughly the $110. So if Nike drops after earnings, guys, my average down on this stock is going to be in the high $80 range. If ever we retest that area, that's when I'm going to be averaging some Nike here. So then my average cost becomes right around where it is now. So that's what I'm looking to do for that. Other than that, guys, nothing has changed whatsoever. I really am going to be focused on just sitting back, guys, and just letting the market play out this week. I'm not interested. I mentioned it briefly in yesterday's video when I did the top 5 options, guys. I'm just being very, very cautious this week. The two plays that I wanted to play over the course of the week, Apple and Google, well, unfortunately, they had their news and pretty much gapped up this week, so I wasn't really able to play them. We were looking for another one, right? I was looking for ON Semiconductor. They came down today about 1.5%, right? They're coming down into my $71 range, but I'm really gonna try and get greedy on these guys. 70s, 69s maybe. I wouldn't mind writing those. Still waiting maybe if AMD has a bit more of a pullback. Tomorrow here, maybe into lower 180s. I may be able to find some premium in the 160 range, right? What else do we have? Shopify. Shopify was down a little bit today, right? Came down to the 76.48, but not really low enough for me. I would need to see about 74. I'm going to try to go for the $70 range. So really nothing really except for SoFi. SoFi actually offered up a decent little opportunity on the morning to be writing the $7 or 650s for next week. But even that, guys, I'm just staying very, very cautious. I'm letting the market come to me, and I'm only picking the best opportunities for this volatile week, because the last thing that I want is writing some puts today, and then they perform well tomorrow and early on in Wednesday, and then Jerome Powell just crushes us, and I potentially get assigned on some stocks that I could have just waited for. What I'm specifically looking to do, guys, is after the meeting, if on Wednesday the meeting is bad and we get a big sell-off in Wednesday afternoon leading into Thursday morning, I'm going to be looking at put contracts, short put contracts for the following Friday, guys. But just based off of the volatility alone, I think I'll be able to get some juicy premium. So until Wednesday, probably not much trading, if any, for me. And then Wednesday, if we do get negative or positive, that's when I reassess, and that's when I look for options for the following week. Just taking a little bit of a breather, staying a bit cautious. I hope you understand for that. So I hope you guys enjoyed today's video. That's pretty much all I had for you. Be very cautious in your trading this week. It really could go either ways. I would be lying if I could tell you I could predict the direction that markets are going to head leading into Wednesday. The best we can do is be prepared for either or scenarios, guys. So just wanted to leave you guys on that. But keep your heads up, guys. Keep your heads in the game. The bulls are in long-term control. So even if we get a little bit of a sell-off that lasts for a couple of weeks, it's bullish. It's an opportunity for buying. So please don't forget that. So if you enjoyed today's video, guys, please consider dropping a like. Would really appreciate it. And consider subscribing to the channel if you're new as well. Thank you so much to each and every one of you who have subscribed so far. We're now over 900 subscribers, guys. It's been almost a year that I've been on this journey for from pretty much starting my YouTube channel back last year in April all the way until now, almost a year, and we're almost at 1,000 subscribers, guys. I thank you so much for supporting me on the channel with all of your interactions. It's really made the journey worthwhile, and I love all you guys. And now lastly, if you have any questions whatsoever, please feel free to leave me a comment down below. Anything you want, specific stock analysis, technical analysis, an options play you're thinking of, anything you want, or macro whatsoever, leave it down below in the comments. I'll be happy to answer, guys. Take care. I'll see you tomorrow after the close. Peace.